A lot of the reason why people were worried heading into this report was because of Texas Instruments' disappointing numbers. Is Texas Instruments seen as a barometer, or is Intel seen as a barometer for chips?
Actually, that's a great question. TI is a leader in pretty much all the segments except computing and wireless communication. Oh. So TI makes analog chips, goes into everything. And you have to remember that TI went from 97 to 120 from a share price perspective between November 27th and January 25th. So giving $10 off of that 120 is a pretty, you got to take it in relative to expectations. TI wasn't a bad print, but the expectations may have gone ahead of themselves, number one. Number two is we never know from a end demand perspective how things shake out. Analog is a better barometer than perhaps in isolated areas such as Intel or Qualcomm for wireless or for PCs. So, but again, when you put all of them together, when 3 or 4 large companies try to tell you that there's something amiss, then you start to worry. Yeah. But usually the stocks respond well before the fundamentals.
But it doesn't look like there's anything necessarily amiss at least at first glance here.
No.
In these
no, revenue for 4Q looks okay. Gross margins in line. Next quarter perhaps a little light relative to consensus estimates. 15 billion versus 15.04.
They didn't beat, right? They didn't come out with something better.
No, that's true. However, one of the things that's been happening is actually expectations may have been too low for Intel from a PC perspective. The PC market has actually been improving, but from a mixed perspective, PCs are sort of weaker gross margins relative to the data center business. So EPS will probably have to be a touch lower if all else being equal, PCs dominate relative to the data center.
I just want to go through the numbers for the divisions here that we're talking about. So I'm seeing it looks like the PC business here, if I'm reading it, the client computing group down 2% to $9 billion. The data center group up 20% to $5.6 billion. The Internet of Things group up 21%, $879 million. So relatively smaller part of the business at this point. And what else am I seeing? The Programmable Solutions group seeing an increase of 35% to $568 million. And NSG, non-volatile memory solutions, having a look at all these acronyms here, up 9% to $889 million. So how did those various divisions meet with what you in the street were looking for?
So on a relative basis, the data center group is perhaps the most important. The revenue up 20% is a strong number. Operating margins up 59% year on year. Those again good numbers. A lot of it is expected. I think the modest differences will come from the tone of management in the call as to is AMD gaining share, for example, which has 0% share. You're expecting it to gain share through 2018. So are you seeing any movement in that? Is Qualcomm doing better than expected from a server perspective? And of course, the elephant in the room is the flaws on the CPUs and how they're dealing with that.